Very good morning, everyone. Charles here, Frgnt Daily Chart Analysis. Fun Frgnt Coupon Friday, as I like to call it. Friday is statistically proven to be my most productive trading day of the week. However, today I feel that may not be the case. And that's really just stemming from what I'm seeing on the DXY and my favorite positions in the market. So, of course, I'm looking on that DXY weekly time frame, which as you would know, would align pretty much perfectly in terms of the duration of candle closure on that daily and the weekly time frame. So we only have until the close of business today to really get those moves. Now, if I'm basing my analysis on that weekly 50 MA and expecting rejection to the downside, or at least price to close below that weekly 50 MA, there is every potential that we are just going to close in and around the area that it's in at the moment, below the 50 EMA and just above the 4-hour 50 EMA, where price is, of course, looking to hold towards the upside. Now, in contrast to that, it's not the end of the world, because as we can see, based on price action from Monday, all we've really done is gravitated between these two 4-hour order blocks that are still very much so there on my chart. Although they've been mitigated, price has failed to break and close above, and price has failed to break and close below. Therefore, I've kept them on the chart. And as you can see on that daily time frame, we haven't really had much price action movement throughout the week. I mean, if you just measure that, I mean, you can see it. So that's just the highs and the lows. But with that said, we've been able to capitalize on GU longs yesterday. As well as that, I took an EU short yesterday, and the day prior, I believe, was an AU short as well. So there definitely is reason to speculate within these two ranges on the DXY. However, and this is the big however, and already being able to anticipate what could well be a bit of a quiet day. Based on my analysis, I'm definitely favoring cross pair shorts. What I mean by that is I would much prefer to take an AU short, an EU short, and a GU short. Now, with that said, if I'm expecting weakness to come out of the DXY for only the day, for the close of business today, with no well, I can't take a position tomorrow. Today is that last day. If not, then on to Monday. Then it's very unlikely that my thought process in terms of cross pair short positions will actually play out. It's very unlikely that there'll be enough liquidity in the market for that to play out. So let me give you a good example of that. So if I head to AU, as you can see via AU, the only position that I'm able to take on AU is a short position as a result of trading out of that higher time frame weekly order block. Now, the better position that I'd love to take is based on price action and structure on that 4-hour time frame. As you can see illustrated in red, we've made clear low lows in the market, followed by a lower high, looking for that lower low continuation. Now, of course, I would love for AU to short, but for AU to short, I need to have DXY strength coming out of the market. And am I anticipating DXY strength to come out of the market? Not particularly. I'm expecting a weakness. So the way that I'm able to combat that is really understanding in the market, how do I gain that DXY strength? Is it the fact that the strength that I'm going to take could well be short-lived as a result of price just breaking above that weekly 50 MA, but my thought process is still very much so aligned that the current candle will still have to close below that weekly 50 MA. So what that suggests to me is any of my cross pair short positions could well be short-lived. Now, I hope that makes sense. It's quite a confusing concept to get your head around if you're hearing that for the first time. So this is where I'm anticipating potential strength to come out of the market on those lower time frames if we are going to start pushing through that weekly 50 MA. And who knows, my analysis could be completely incorrect. We don't reject that weekly 50 MA towards the downside, and we continue to push bullish, and we close above it for the week. That's of course a possibility. At some stage in the market, your strategy doesn't always respect it, and that's just trading. But in this element, I'd be quite happy to see the DXY actually continue moving towards the upside at some point to then give me that weakness shown on the Aussie dollar, pushing price to the downside. Alternatively, other ways that I could seek to understand whether or not I could gain that strength coming out of the market after some weakness, mind you. So I need, let's say, for a good example, I need some weakness to come out of the market first and foremost for my cross pairs to get to those areas, such as AU. I need Aussie dollar to push up to this area, and the only real way that that's going to do it, no disrespect to the Australian dollar, that's simply going to be based on DXY weakness. So if the DXY gives us those signs of weakness into these higher areas that I'd be willing to take a good looking short from, then of course I'd need the DXY strength to step in to then push price back to the downside. So the DXY strength, for a good example, it could come from price pushing down here in regards to the weakness first showing. That will then allow Aussie dollar to reach up to those highs, and then let's say, for example, if I get my confirmation down at this low here, or even down at this low here, that would be the strength coming in the market. That would then push Aussie dollar back down. So as I've said, it can go either way. That's just a pretty simple example of what I'm looking for today, using the DXY as a confluence to tell me that, okay, well, Charles, you want to sell Aussie dollar. Is Aussie dollar ready to sell now? Could I be completely wrong and I should just hit the sell button? Well, for me, absolutely not, because the DXY is neither here nor there at the moment. We're not at these session highs. We're not even at these ultimate highs in terms of previous daily highs there on the DXY. So there's no reason why I should be looking for a position just yet. And then based on my setup on the actual pair that I'm looking to trade, AU hasn't really presented me with a setup just yet. No, it hasn't. So therefore, there's not a lot for me to be doing at the moment. So as you can see, my alerts are very much so at the extremities. We've got the highs waiting for an alert, approaching that 4-hour and 15-minute order block, and 4-hour 50 May, and an alert if price wants to start to snap Asia for the pullback short. What else am I looking at today? Potential Euro US dollar shorts. Again, the similar concept is required to happen for me to really take what I believe would be a short position, or a better looking short position on EU. Now, with that said, if the DXY just gives us that continued weakness and continues to reject that weekly 50 MA, which we must say it has done that all week, and we are now in the phase of we only have 14 or 15 hours left of price to actually show its hand, and is it going to respect strategy by way of look how the weekly 50 MA is performing in terms of the most recent weekly candles. You can see exactly why I seek to use that as a high degree of confluence when I'm trading, from the weekly, daily down to the 4-hour, and then I'm not interested in any other EMAs. So that's the real thought process at the moment. GJ, looking for either way again, to be honest, with some good confirmation. I'd be happier taking that long in regards to yesterday's candle closing above the daily 50 MA, looking to reject price towards the upside, and then of course refined areas. Here we are. So a couple of areas here in the market which just tells me don't be too aggressive here, because you can absolutely understand why price may want to gravitate more towards these lows before looking for that push towards the upside. In terms of the short, much easier, but of course we're then trading down towards the EMAs where price is looking to reject, and of course by the time price gets up to these areas, we'll be looking incredibly bullish. So the best case scenario is to wait for an area in the market. In this case, it would be a higher low to be broken before price returning back to those highs for a short position down. So that's just another example of what I'm looking for. GU is kind of a maybe pair today, in all honesty. I much prefer AU and EU. US dollar CAD, there's only one direction in my opinion that I'd like to be taking that position, and that would be longs in favour of all EMAs, in favour of most recent price action, in favour of even a breakout of a 4-hour range that we've identified. Once we've made that high, higher low, higher high, higher low, looking for the continuation back up to the upside, which would then be that weekly 50 MA before the rejection south. However, one thing I don't like about this trade already is the fact that we're already looking to reject that weekly 50 MA as we speak. And as we did yesterday, we tapped into it, and daily candle closed bearish with a wick to the high, rejecting that weekly 50 MA. So whether or not that's a good position still remains to be identified later on throughout the trading day when price gets back to my desired area of the longs. Nevertheless, it's a setup either way, so it's one to consider. But with that said, no, I'm not going to be taking everything today. and that's why I've just got my color coordination here of just what I would much prefer in the market and what I'd happy to see go without me, to be quite honest. And UJ, also a good looking pair, but again, only one direction that I'd be happy to take that. There's no reason for me to look to select price up at these highs. There's no way that I can identify an order book to support me short as where we are at the moment. So therefore, I'm just going to wait for price to dip right back there into the range, take out the early buyers that are just trading in terms of support and resistance in a basic trade, wait for the liquidity grab, and then we'll be looking for a long there based on smart money concept. So really, that's kind of the how the cookie's crumbling for the rest of the day. But with that said, I mean, going through performance the last couple of weeks, months, it's still been a very steady quarter two, I must admit, in terms of this current week. Again, a very steady week, just picking up the percentages here and there, and of course finishing profitable for the week. So it's not too bad, and that just brings me on to a nice final point, that is trading. I can understand those of you that are taking funded challenges, you want to pass them, you see the finish line as soon as you've purchased your challenge, but this is trading. And that's not to talk ill about any of the funded type of prop firms, but that's really how they get you guys. The fact that the finish line seems so close, but I think the bottom line that we must all understand as traders, and even me from time to time, we must understand that the majority of us are outperforming banks. These are institutions that can't make percentages the way that we can. So therefore, when we can take 1% to, well, not a risk to reward of 1-to-1, but if you've taken 3 trades and you've taken 1 win and 2 losses, and you're 1% up, let's say, for the week, I still think that is a great achievement for those of you that are still starting out in trading. So really have your expectations aligned correctly. Recognizes that this is one of the easiest professions, but also one of the hardest to manage in terms of your own performance, right? Because let's face it, we're only pressing buy and sell on your platform, and you're only forecasting trades and using pretty colors like myself to identify points of interest. So that's really as difficult as it gets to you. Once you've got your strategy nailed, this becomes the most easiest profession that there is out there. Believe you me, you just have to trust me on that. There are much more difficult professions out there that require a tremendous amount of brain work. Even for a brain surgeon, for example, it requires so much more than what we're doing. So really have your expectations aligned in terms of what you're achieving in the markets. And I quite understand if you're having to make 10%. Take it easy. If you're the reality of it is 10% to make, a bank is definitely not going to return you 10% on £500,000. But if you can make 10% on £500,000, then easy does it. And if someone was to offer you a £500,000 account and say, there you go, just make 10% for the year, I'm pretty sure you could do that quite easily, right? With ease. Majority of traders can easily make 10% in a year. So just have your expectations fixed. Recognize that it is not a sprint. It is an easy marathon, one that's at a steady pace and one that shouldn't be measured based on time duration. So you're in it, you're in the race, so just take it nice and easy. And when your setup aligns, when you're happy with the confluence, if you're using the DXY, if you're using the Japanese yen index or the basket, then take your position, so long as it makes sense. And always, as I love to go on and on and on and on about, just manage your risk. It's so easy. Once you're managing your risk and you're just taking positions with fixed set rules. For example, myself yesterday, I have a trading rule of 3 trades per day. So I took a GJ short yesterday. I took what else was it? An EU short yesterday, and then I also took that GU long yesterday. So that's my plan. So anything else, I just had to let go. So once you're able to have that fixed plan, as I said, trading just becomes so easy. I approach the markets today. I know I only have 3 opportunities in the day, and that's the limit. It's not a target. So if I want to stop trading after the first trade, then absolutely, as I've said, these are limits, not targets. They don't have to be obtained. So yeah, that's just my Little word of the day. So I am looking at a degree of things today, but nevertheless, I do believe quite a bit needs to align, particularly for me to gain price to return to those areas. I need to see a bit of DXY weakness, whether or not that's going to come from price pushing down to these lows, or whether or not that's going to be price pushing up first and foremost to then give me the weakness. But as I've said, I'm not aligning to take any of the cross pairs in a long scenario, so therefore I foresee it could be quite a quiet day today. But as always, thank you very much for your support, your attendance when you're watching these videos. If you are, I do appreciate it, and I hope they're helping to some degree. All the very best in your trading journey. Do take care. Ciao. Speak to you soon.